Thank you, Chair. My name is Dr. Jackson Ndungo from the National Treasury, liaison office attached to this committee. Thank you.
Yeah, and CS, you may know, I mean, you've been the chair of a Public Accounts Committee, that the National Treasury has a seat in this committee, and the officers you have sent are extremely useful. I think Daktari has been very useful in doing the liaison and connections. We are done with the introductions of the stakeholders. We go to the CS National Treasury.
Thank you, Chairman, honorable members of the committee. I am accompanied here by a number of officers from the National Treasury and Economic Planning Ministry.
And conditional grants at the county level. Could I have a proposer for the agenda?
Chair, I propose.
Thank you, Senator Gattai.
Chair, second.
Thank you, Senator Sifuna. Before we go to agenda number 6, I do not think that we need to do administration of oath in today's instance, because this is not like our traditional interrogation of audited accounts. But yeah, so I think what we will first of all request the CS to do is to table his written responses, and then after that we'll ask the CS to take us through those responses.
Thank you, Chair. Mr. Chairman, I hereby table the following documents before the committee. That's management responses and the accompanying annexures relating to the matters currently under consideration by the committee. Thank you.
Okay. Clerk, have you circulated the copies to members?
Yes, Chair, the copies have been circulated.
Fine. Before the CS takes us through his responses, CS, this meeting will be as brief as you want, or as long as you want. We take note that you have been the chair of the Public Accounts Committee in the National Assembly. We also take note that you have been in Parliament much longer than you have been at the National Treasury. And so you would appreciate and you would understand the essence of this conversation and the role the Public Accounts Committee of the Senate plays. The two issues that we are about to go through are extremely important. If in this financial year, counties are going to present their financial statements on the accrual basis, over the last 10 years, we've been used to seeing financial statements prepared on cash basis. We need to understand the readiness of the counties, and from the CS perspective, the high-level policy perspective preparedness. And if there are questions that might not be answered today, we might then direct, or you might also direct as a CS, that the technical committees that have been established can engage further with this committee. But the first point of interaction must be with the CS. And we might allow conversations with the technical teams subsequent to this if there are some questions that have not been addressed. The second issue that we are supposed to deliberate on is also on accountability for donor-funded projects, or conditional and unconditional grants. And I think that on this, your background would be extremely useful, because we would expect you to...
Office of the Controller Budget is also represented. Parliamentary Budget Office is also represented. Chairman of ISPAC is a member, and then CEO of Institute of Certified Public Accountants of Kenya. This steering committee's primary mandate includes providing overall direction and coordination for the project transition from cash to accrual accounting. And this involves adopting a roadmap for the transition and appointing technical committees or working groups to handle the project's day-to-day implementation and communication, stakeholder engagement, and monitoring compliance. The steering committee has since approved a 3-year transition roadmap. The revised standard chart of accounts has also been approved, the IFMIS re-engineering project, and the public sector capacity building training plan. All these have been approved by the steering committee. The steering committee is supported by the following technical committees comprising the 5 work streams: IFMIS re-engineering work stream is in place. Accounting, budgeting, procurement, and reporting business processed work streams. Assets and liabilities management work stream. County government's work stream as a standalone work stream. And then we have the training, communication, stakeholder engagement, monitoring, and compliance work stream. So the National Treasury has a dedicated website, Transition to Accrual Accounting, under the Accountant General's Desk tab, where all support materials are available. So, Chairman and honorable members, the cash to accrual accounting transition roadmap and the standard chart of accounts can be accessed from the said dedicated website, together with capacity building and sensitization plans. Kenya has taken advantage of the transition exceptions provided for under International Public Sector Accounting Standards 33 and approved a 3-year transition roadmap accordingly. A summarized transition roadmap is as follows. The first year, which ended which reigned between 2023-2024 to 2023, which ended on 30th of June 2024. Here, audited International Public Sector Accounting Standards cash-based financial statements were to be made updated or available. Opening statements of financial position was ascertained. Now, from 2024-2025, which ended in June 30th, 2025, just less than 2 months ago, was the first transitional International Public Sector Accounting Standards accrual financial statements. Here, the balance sheet must have at a minimum financial assets and financial liabilities. So we, for the first year, capturing financial assets and financial liabilities as a minimum. Now, going to the next financial year where we are in, which is the second year of implementation of this system, that is 2025-2026, which will end on 30th of June next year. This will be the second transition transition and International Public Sector Accounting Standards accrual financial statements. Here, the balance sheet will have at a minimum financial assets, as was mentioned above, but also inventories and financial liabilities. So in addition to financial assets and liabilities, we will also have inventories forming part of the financial reporting. The final year, which will end on 30th June 2027, which is now the final year of implementation, here they will be full compliant with International Public Sector Accounting Standards of accrual financial statement that will include fixed assets, all financial assets, all financial liabilities, and all liabilities. So apart from the financial assets, the financial liabilities, and apart from inventories and other assets, there will also be fixed assets included in our financial reporting, and all the liabilities, including the long-term liabilities. So transitioning public entities are required to develop a detailed entity-level roadmap as per the above. So all entities are required to do a roadmap to transit to full accrual accounting by 2027 June based on this roadmap. Honorable members and chairman, I want to talk a little about IFMIS re-engineering. IFMIS has been assessed on what needs to be done for all public entities to report on an accrual basis. The National Treasury has already engaged a consultant to redesign IFMIS to ensure it is the one-stop shop for all government entities. This will include the integration of all other systems with IFMIS, which include payroll, pensions, EGP, e-citizen, and county government revenue systems. All will be integrated in the IFMIS. The consultant is already on site for the re-engineering, which is expected to go live on 1st July 2026. And Chairman, I just want to mention that these things are not happening at the same time. You will find some are a step ahead of the rest. Like integration of payroll is something that we are implementing this month. We are actually integrating our payroll system. We are also integrating pension system. It is already underway. Even EGP is underway. Now, on assets and liabilities, there are 17 categories of assets and 9 categories of liabilities that we want, and that will be seen in the revised chart of accounts. So, key issues. Entities are required to maintain updated fixed asset registers in the IFMIS asset repository module. 2, boards of survey are mandated to validate assets by 30th June 2025, and it is expected that they have done that. All financial assets and liabilities must be recognized in the opening balances as at 1st July 2024, and that happened. An asset valuation framework has been developed and is undergoing public participation. You know, this is another challenge that we've had. Actually, to really get to know the value of assets, even the land that the government owns, it's guesswork a lot of the time. And if we have to value it, you have to spend so much money in doing the valuation. And this, with this system, will be cured. On training and sensitization, the steering committee has undertaken stakeholder mapping that includes all preparers of financial statements and users of the same. These include all national and county government entities. We are also dealing with oversight bodies, including internal and external auditors are being trained. PFM officers are also being trained. The national and county assemblies committees, including this committee, we are mapping out program on training and sensitization. So, during the year ending 30th June 2025, the National Treasury and the Public Sector Accounting Standards Board held several training sessions with preparers of financial statements, internal and external auditors, PFM officers, and accounting officers. All have been trained. And this financial year, the National Treasury will now hold sensitization training with all oversight bodies, including this committee. On communication, the steering committee has been providing regular updates and guidelines on the transition process through the following mediums of communication: circulars. We have been issuing circulars, dedicated website, as I mentioned earlier, social media pages for quick updates. We can't do without social media anymore. It's the order of the day. Emails, posting of guidance materials through a dedicated website, and as I told you, in the desk of our Director General Accounting Services and Quality Assurance, print media, also a newsletter and publication. So, as I conclude, Chairman and Honorable Members, significant progress has been made in institutionalizing accrual accounting, including the establishment of governance frameworks, stakeholder training, and interim reporting mechanisms. However, of course, as is the challenge with all government programs, adequate funding is needed, compliance by implementing entities, and enhanced technical capacity remain critical to meeting the set timelines. So the National Treasury remains committed to achieving full compliance with the International Public Sector Accounting Standards accrual basis by 30th June 2027. Regular updates will be provided to this committee, and again, I want to repeat as I wind up that I am very confident that the steering committee would be willing to appear before you, led by the chairperson or the chairman, who is my PS in charge of National Treasury, to explain further the technical details around this system or migrating to this system. Thank you, Chairman, and that is my submission.
Thank you, CS. We were concerned that the Cabinet made a resolution on 7th of March 2024, and the steering committee was only gazetted on 20th of August 2024. And I think you have said that this was one of your first actions when you took office. I think there was a period where we were very, very concerned that a steering committee was not in place or a steering committee had not been gazetted, but we take note that it has been in office now for the last probably 1 year. Almost 1 year. In the next few months, we'll be considering reports from county governments prepared on accrual basis. As I said earlier, over the last 10 years, we have been used to the statements prepared on cash basis. Now, the Auditor General, if this is a transition that runs all the way to 30th of June 2027, are we going to expect a lot of adverse opinions or disclaimers in the first year? Because the issue of assets and liabilities has not been settled. It has been a long process, and CS, you might recall that at some point, the CS National Treasury then directed counties to establish county asset and liability verification committees. And each county government did a very comprehensive report. These reports were then submitted, I believe, to IBEC. Now, from IBEC, we don't seem to have closure on the issue of assets and liabilities of county governments. So perhaps it might be a different framework for national government, but for county governments, there's a serious concern. We have 47 reports. Some of these reports, when a new governor is elected, they come before this committee and they disown the report. And we tell them that this verification, there has to be closure. You have to draw a line in the sand and agree that these are our assets and agree that these are our liabilities. The governors have not done a good job, and every time they say that the matter is stuck in IBEC. So maybe from the Auditor General's perspective, do we expect a lot of disclaimers, adverse? And then to the CS, what is the status of the asset and liability reports that were submitted to IBEC? Starting with Patrick.
Thank you, Chairman. From our end, initially there was worry that we'll have issues with the opening balances because of the transition. But I can see the CS has really given guidance on how we proceed from the start, because you can see for the year ended 2025, they have requested that the entities prepare an opening statement of.
Are the counties really prepared for this? Because that will be the starting point. And if they are not prepared, the question Chair is asking is going to happen. So have you established that the counties are ready now to take off from what you have actually established? Thank you.
CS.
Chair, you'll allow me to begin from where you started, asking about the inordinate delay. And I want to address you by stating that when I'm sure you watched my vetting, and there's things that I committed myself to. One is this accrual basis of accounting. I also talked about zero-based budgeting. I talked about e-procurement, and I'm committed that we must deliver on this. So I found the government already had started or rolled out a program for this. So what I've done is to help it move further, and that is why it was one of the decisions that I took to roll out by gazetting the steering committee in August. On the issue before us, that you see, the auditors, whether we are expecting adverse reports in the first year, I don't think so, because one, the auditors audit based on policy of the government. We have decided to take advantage of the exemptions provided through the international standards, accounting standards, that we are rolling out this program in 3 years. So we started with the easier ones. Where there will be much complication is the fixed assets. Financial assets, usually, there is no much complication in terms of even valuing, because the values are there. So the financial assets are easy to determine their value. And financial liabilities. That is why in the first year, we have restricted ourselves only to having financial assets and financial liabilities. Then we move to the second year or second transition, where besides the financial assets and financial liabilities, we are bringing in inventories. And inventories also are easy to tabulate, because inventories are goods that are acquired or procured within the year. And they have not been utilized. So they remain as stock. If you are in business, they would be stock of trade or stock in trade. So that will be that. Now the final year is where now we have to roll it out fully and bring in the elephant in the room, which is the fixed assets and long-term liabilities that would be difficult to quickly determine. And so the understanding here is that within this period up to 20th 30th of June 2027, we are able to have a system where we are going to determine the value of all assets, both for national government and county government, the fixed assets. And you have asked a specific question, and that ties to what Senator Dulo has asked, whether county governments will be ready. We are preparing them to be ready to be able to determine and get these values. And again, you are right that there is the valuation committees, the asset valuation and the liabilities valuation committees have been working on this. But we feel that time is enough for us to be able to determine. And by the way, counties should even find it easier to determine their fixed assets, unless the assets that were handed over by the national government, which will go through the same valuation process as national government assets. But counties acquiring new fixed assets, they should find it easier, because at least these were not acquired long ago. Counties have not been in existence for far too long. National government would even be worse, because if you go to even the government buildings, some of them were built in pre-colonial period, and so determining their value may be very complicated. But still, we feel that period is sufficient enough. Finally, Chair, on the issue of counties disputing and rejecting what others have done before, I think this is something that we must deal with, because governments are in perpetuity. And the idea that you are elected today to take up an office does not render those who were in that office before you and the decisions that they took illegal as such. So we need just to respect that governments run, and people, the various officers take up positions which others have been occupying, including the office that I today hold. Other 17 Kenyans since independence have occupied this office, and they have made decisions. I must also respect those decisions within the law. Only decisions that are taken outside the law I would not follow. So I hope that addresses the question of the preparedness of counties. We are still preparing them, and we feel the time that we have between now and 30th of June 2027 is sufficient enough for us to be able to have this system now fully operational.
Okay, note the Director General Accounting Services is a project manager within the steering committee, and I hope there's a proper matrix for stakeholder engagement, because we didn't have to be the ones to call the CS for us to have this conversation. I don't know what the plan is. When did the steering committee plan to engage Parliament? Because already counties are reporting on this standard, and in the next couple of months we'll be receiving these reports. As per the original plan, what was the intention to engage Parliament?
Chair, I may just take note of that as a concern from the committee so that we fast track, but I'm aware that the plan was to have it this year. So what we may need to do is to front load, or rather bring forward the engagement with the parliamentary committees, especially the relevant ones, so that you can appreciate this system even as we start reporting on accrual basis. Actually, the first year will not be very complicated, because it's just reporting on financial assets and financial liabilities, which are very easy to determine, and their values can easily be ascertained even in the market.
Yeah, you'll appreciate that over the years we have not been looking at the balance sheet in this committee. So it will be the first time the balance sheet will be presented. And so even in the private sector, whenever IFRS is updated, the boards, corporate boards are updated to anticipate the changes. This Public Accounts Committee is like the corporate board for government entities. So that engagement needs to be timely, and it does not need to be prompted by Parliament. I think if you've got a matrix for communication, please ensure that you implement it. We will request that the Clerk of the Senate and the Parliamentary Budget Office, which I can see has a seat in the steering committee, so that who represents PBO in the steering committee?
Chair, I'm not sure, but I think it's the Director of PBO.
Fine. So we can have an internal technical conversation with the project manager, so that it prompts the next round of interaction with the CS. You can flag the issues that have been
I'm told
concerned.
it's called Joash Kusimba, the representative, you know him?
Yes.
The representative from PBO.
Fine. So we can have some in-house technical conversation and flag the concerns that exist, if any, and then that can prompt our next interaction. Senator Cherargei, please go on record.
Thank you, Chair. Good morning. Waziri, it's good to see you. Cherargei Kiprotich, Senator of the Republic of Kenya from Nandi County.
Yeah, allow me to voice something that Senator Dulo has brought before the House. CS Article 225 gives you certain powers that gives you some original jurisdiction that even Parliament does not have. That is authority to stop the transfer of funds to a state organ or any other public entity for serious material breaches or persistent material breaches of the measures established under that legislation. Now, the legislation has defined persistent material breaches in various ways. For example, a county entity that has persistent adverse opinions. You recall, I think Nairobi County, for almost 10 years, had adverse opinions. Kisumu County also was in a similar situation. This committee has made certain recommendations, and some of the recommendations border on calling upon the CS to exercise the power under Article 225. We are very careful with 225 because when you make that decision, it needs to be ratified by Parliament. And so we cannot be the ones to originate it, to initiate it. Now, CS, you understand what happens in counties, and you understand some of the accountability concerns. Part of it, pending bills that remain unsettled for a long time. Of course, in year one, we expect that financial assets and financial liabilities will be reported. And that means that counties must figure out their stock of pending bills. What CS Ukuri Yatani tried it. He brought a resolution, he brought a motion or proposed a motion, and I think it was defeated in Parliament to stop the transfer of funds to a number of county governments because of, was it Nyeri? Yeah, Nyeri has done fairly well, but there are some counties with huge amounts, which then even kills your economic plan, economic thinking. Because if you are not paying contractors and the small service providers, perhaps the distaste and dislike of government is as a result of incompetence and inefficiencies at the local government level. So what are your thoughts on this? Because we really would wish to stop the flow of funds to some counties. But the Constitution gives you that original jurisdiction. CS.
Thank you, Chair. Chair, first I will agree with you that a lot of happenings in the counties need serious attention and need to be punished, and at times a reprimand is required because some of them is just kind of misbehavior, if I may, for lack of better words, on the part of county governments, where you find they even requisition to pay X and end up using the same and applying it and paying Y, and for reasons you don't understand, and keeping some of the pending bills longer than necessary. Although, again, there's a caveat that even national government, MDAs, also chair, I know you engage a lot with counties, but even the national government, and I've sat and chaired Public Accounts Committee, you find new bills or new debts paid and old ones are skipped. And that is why we have some debts dating to 2005 called pending bills dating to 2005, and now we are paying them, we are looking for money to pay them, yet there are some services that were offered last year and they have been paid and others are like that. So this needs to be dealt with, and I agree with you that Article 225 gives my office powers to deal with some of these errant officers and counties. But again, my understanding of this article, Chair, is that you must exercise it as a last resort, and cautiously so. Why? Because when you stop transfers to counties, in a sense, you are not just even punishing the county government or the governor, but the whole county will suffer. There will be no services. And there are even staff in that county who, for some reason, have found themselves as employees of that county. And it is a lot of times not their mistakes. When you stop the funding, they will not get their salaries. And they also have the children, they have people who depend on them. So it is, I would say, a power that comes with the responsibility. You have to really be cautious. I know Senator Dundo submitted this request and it was transacted in my ministry. I know I signed off declining to stop transfers to Isiolo County. I think I'm correct. But my thinking is we should exploit and exhaust all the avenues to deal with some of these misapplication, mismanagement of public resources. And that is why we are coming up with systems that would deter some, like the issue of paying, requisitioning and paying different providers, avoiding and all that is being dealt with. The system we are, and I think we are implementing it this month. It may be very difficult now for counties. You see, the work, my primary responsibility as cabinet secretary is to come up with systems that would help stop some of this mismanagement of public funds. The other organs will deal with violation, starting with the Auditor General. Starting with control of budget, there is the Auditor General, we have ESCC, and I'm happy ESCC is in the room. We have DCI, all these officers are also put in by law to deal with the failure to comply. But it is my duty to prescribe systems that would help deter, and that is what I'm doing. So to get to the specific question, yes, I can apply this article, but I am also trying to be very cautious, because otherwise unintended consequences may be realized out of a very noble action.
Senator Dulo?
You wanted to say?
Yeah.
Thank you, CS. Of course, my county has been facing a lot of challenges, apart from what you have mentioned. My request then was during the impeachment process. And I hope you understand the way counties deviate a budget allocated to them, even salary and development, for other purposes that they are not intended for. And nobody actually takes action against those counties. As you've said, sometimes we end up punishing members of public by doing that. But the challenge is, how do we stop these issues? For example, you have mentioned about voiding. You've seen some contracts that are done yesterday are paid. And there are some that have been there over 10 years ago are left pending, which is also accruing interest. For example, I have an issue with the budget currently happening in Isiolo County for this financial year, where members of public and the assembly have gone to court. Two people sit, a clerk and a speaker who is actually even being challenged. We have apparently two speakers. Yeah? One who has imposed himself on the assembly through crook methods, that up to now DCI is actually giving a position. A clerk and a speaker sit in a chamber where members are not even there. They sign a budget, approving the budget, without going to public participation, without committee being there, and force the deputy speaker to sign that particular budget. It goes to, government printer, appropriation bill is actually approved. How can you deal with that kind of a county? It's challenging. Because even if you are supposed to be cautious, this is a serious fraud, serious corruption that is happening within that particular institution. And that is why Senate is actually frustrated. We say something must be done, in as much as we don't actually punish the communities living within those counties. we must do something. But I think the way things are, even with allocation of budget where counties don't have challenges, there is a serious problem as far as budgeting is concerned. Money changing hands left, right, and center. HR procedures not being followed. The law is the same. You see, money not utilized in a proper manner. It's quite challenging. But I think maybe you need to open up that particular provision to see how you can be able to stretch and deal with the current happenings within our counties. But even if you said no, I think members of Parliament have gone to court and they have stopped that particular budget. Because we must deal with those crooks who sit and do those kind of things. I thank you.
You want to type your question to that? Or you want the CS to respond? CS?
Yeah, Chair, in response, I want to just say two things. One, I agree that I think this article was not just provided for in the Constitution in vain. It must have a meaning. And it's something that I must engage my mind to in applying so that we protect public funds, because this is taxpayers' money at stake. But I also want to agree with you, Chair. There are two ways of killing devolution. Two ways through which we can kill devolution. One is allowing the governance challenges that we see in counties to continue, because they are serious and they are dire. Counties must be called back to order a lot of times, because a lot of things that they are doing cannot be accepted, like what Senator Dulo is talking about. Why is it that politics is everywhere, even at the national government level? Why is it that we can have a speaker of the National Assembly go through the term without much problems, Senate the same? In counties, is turmoil all over, across the country. Our county, where both of you and I come from, last term, last parliament, it was a mess. You'd not even understand, differentiate the county assembly from a theater of fights. It was always fights, people getting injured, MCS, and those things are happening, partly engineered by county executives. And so it is such a mess. And as you put it, sometimes you don't even know who is the speaker. The other thing that I want to mention also, which tied to the first reason why counties would fail and will kill devolution, is where we allow the governance system that we have today to persist and continue with the things that they do, including financial management. And I say, as you call for more resources, we should call for more accountability. And besides that, and beyond that, is also the question of even employment. Our counties' employment bureaus. And I'm even thinking maybe there should be a suggestion that most of these offices, chairman, should be tied to 5 years term of a governor. Because you find a governor employs ward administrators, sub-county administrators, and village administrators. When a new governor comes in, removes all those people, put them in some directorate, doing nothing, earning salary, which they were earning when they were sub-county and ward administrators, and employs new ones. And employs director of Sijui Ward, director of Border, director of Fisheries, director of what, and you even ask yourself what is the value that these people add. And so what happens is we are denied services as people who come from these counties. So that is one way that we must deal with. And where need be, we can apply Article 225. I guarantee that. Finally, the other way of killing devolution is if we recklessly allow the national government to step in and interfere with the counties. And it can happen. And it has happened previously. We had a devolved system of government, chairman, and it was killed. So the national government must exercise caution. And you and I and the Senator Sifuna here, we come from a political party which has prided itself as defenders and protectors of devolution. It would be wrong for me to sit at the National Treasury and be accused of working towards killing devolution and killing county government. And that is why I have to exercise caution in applying this article, so that I don't show the thirst of just, okay, one county, there are challenges, there are reports of misappropriation, no more funding. And you know, it is very easy for me because it gives me space and breathing space. Because when I don't transfer money to county, to Homa Bay, for example, that I'm not required now because of the constrained exchequer availability, I would be very glad not to transfer. But
remember, CS,
who is benefiting?
It's at least 50% would still go to the county. Yes. And it's for a maximum of 60 days.
Yes.
And you see the beauty, and that's why we want you to, as you've said, apply your mind to it, is that part of it is that the county must come up with a recovery plan. You are compelling the county to come up with a recovery plan within the 60 days. So it's not indefinite. And that's what some counties need. We have what we call the list of shame. About 10 counties where their wage bill is 50% and above. I think our county, Homa Bay, is almost at 55%. Kisii is almost at that level. So you'll find a county where the wage bill is above 50%. It has had either an adverse opinion or a disclaimer, and it has serious audit issues, procurement, financial management issues. If we were to develop a matrix and put all this together, it would then allow you to step in, not to kill, but stepping in almost like an administrator to compel the county to come up with a clear plan that would then be, I think, addressed, I think, control of budget. You've got a role in that, in making sure that there's a proper recovery plan. And sometimes that's what some of these counties need, because primary oversight has died across the counties. The county assemblies are completely incapable of holding their governors to account. When we bring the governors here, we are doing secondary oversight. We don't have an insight or input on their budgeting, on their procurement, on their spending, on their appointments. We are, what do you call those doctors who Johnson would work? Yeah, we are morticians. We are morticians. And yet the public will tell me in my county that you are not correcting the government of their misdeeds. And yet that is a primary responsibility of the county assembly. So that's the frustration that brings us to this thinking that there are some counties where we need to put under administration for 60 days. And I want to encourage you to apply your mind to it, because it is not necessarily killing devolution, but the corruption and the bad behaviors in county governments, some which are led by governors from the party that Senator Sifuna comes from, is an embarrassment.
Correct. Chair, in fact, that's the part of the provisions that I wanted to point the CS to. And the other attribute of a party that I come from is that we like to take bold action. CS, just for the sake of the frustration of the Senate, just give us one county. But you see, I'm also wondering how this will work, because you've also been accused as a ministry. They say that the National Treasury thinks that it is a treasury for the national government, that you prioritize national government. Can you tell us, for instance, sitting here today, whether you ever comply with the disbursement schedule that is passed by the Senate? What is the most current disbursement now? You see, Chair, that this particular mechanism would only work where the National Treasury is actually complying with what is it called, the disbursement schedule. So if you are telling governors you'll punish them for 2 months, and they are saying the last disbursement you have said is for which month are we on? In August, they'll tell you the last money they got is for May. Then how will this mechanism come in, CS? So personally, I just wanted to let you know that personally I'm very happy with the move to the accrual basis, because the CS knows that I'm also an accounting officer, I'm audited, and the Auditor General has been giving me grief because they see the money that the National Treasury owes my political party, and they don't want me to put it there, that the National Treasury owes me 11 billion Kenyan shillings as ODM. But I'm happy now. My finance manager, who's your friend, the Honorable Kawino, will have an easier time. It's the only query that the auditors raise, that we budget for money on the expectation of the law. On the expectation of the law. We have court orders from here to Timbuktu. But the National Treasury and Parliament have refused to comply with those court orders. So I'm happy that when we move to this new system of accounting, we will not get the grief that we usually get from the Auditor General. But that is the question you need to think about. If we do not comply with the disbursement schedule, then this mechanism cannot really help, because the governor will say that is the norm anyway. That is the norm anyway. So maybe you can think about that. But from our perspective as a Senate, we need that list of shame that he's talking about. We need that list of shame so that people can know that there are mechanisms in the Constitution to be able to deal with these issues. Lastly, Honorable Chair, the National Treasury is also accused that in my county here in Nairobi, although we have the largest number of pending bills, the national government owes us a lot of money, but you just refuse to pay the county. It is very difficult, Honorable Mbadi. You have cited two ways of killing devolution, but you've left the main one out. The main one is we need to properly fund our counties. National government institutions have refused to pay Nairobi County what is due and owing to the county government of Nairobi. If you paid us our money, we would be able to take care of those pending bills for as long as we have an administration that cares about the people of Nairobi. So maybe think about those, Waziri, as well.
So you, in accordance with this transition, it means that in this financial year, you'll be reflecting financial assets as ODM of 11 billion.
Correct.
And this Treasury will have to pay.
They will have to pay. You know, Chair, in fact, I want the CS to know that I am going to initiate recovery proceedings. So if you see me obtaining orders for your detention, don't think it is political. I just need that money, and you know why I need that money.
It will be entirely professional and technical.
Correct.
CS, I think the first part was how timely are we? Because if you're holding disbursements for 60 days, then you can only do that in a regime where you are timely in your disbursements.
Thank you. Chair, I will address this, but allow me to start with what my Secretary General says about my possible detention. And just also to own up and say that if there's one thing that I pushed with the finger, probably even harder than the SG when I was his chairman for 10 years, was allocating the resources that are statutorily provided for political parties. And that, up to now, is something that is not happening, largely because of financial challenges. But the money owed to any political party will now be a clear debt recognized in books. And so it will no longer be an audit query. And we will do whatever we can to try to make sure that money goes to political parties, because our constitution makes Kenya a multi-party democracy. And political parties' position in our democratic space cannot be overemphasized. And as someone who has been in party leadership for all that time, it is something that I would not shy away from repeating, that we must try to work on. So I hope, my Secretary General, you will not implement your, is it a threat? But I would understand.
As long as it's done through the proper justice and legal systems,
Yes.
because I know he has a group of goons that can detain you at short
No,
notice.
the advantage I have is over 90% of those goons are my friends.
You are completely out of order for...
Yeah, but anyway.
Chair.
Now, can I then proceed and address these other issues? Because I think that has,
okay.
there are other
Yeah,
issues that
respond
were
when
raised.
yeah.
Then I could address them quickly. On the issue of disbursement, Chair, I cannot sit here and misreport that government has been timely and effective in releasing funds to counties, just like other government departments have been affected sometimes with the cash crunch, so counties have been. And I will tell you that at times counties get even better favorable treatment from the National Treasury than other MDAs and other spending units. of government. And that is also because the county government is a bit unique in the way they are structured, because if you don't give them money, you are like shutting their doors and closing them completely. So a lot of efforts have to be made. But I would also pride myself here and give and say that this government has been very responsive in terms of addressing the cash challenges to counties. Why do I say so? I remember last year, last financial year, apart from the arrears that were carried forward from 2023 to 2024, 2023, 2024, there was carryover to July 2024, which is 2024-2025, the year that just ended. There was a carryover of about 31 billion. That's the amount that was paid in July. After that, it almost took us to October to again give money to counties because of the division of revenue and county allocation of revenue bill, which delayed. And this has been the practice, Chair. And there is no single year for a very long time when the government of Kenya, national government, has, through the National Treasury, has transferred full allocation for the year to the counties. But I must be with confidence and happiness, I would say that 2024-2025 was a different year. That by 30th of June 2025, we not only transferred all the allocations for 2024-25 to the counties by 26th of June, but that even the arrears for 2023-24 was paid of 31 billion in that year. So we paid all the 387 billion allocation plus the arrears that were carried forward. Now, that was done. In fact, the May transfer was done on 19th of June, and the June transfer, the June 2025 allocation was transferred on 26th of June. Now, even though we don't still have County Allocation of Revenue Act in place, which I think National Assembly, I don't know whether they passed it yesterday or they're passing it today.
I think we have processed CARA.
The Senate has done with it. Is done with it.
Because the beauty is that this year DORA was approved on 30th of June, so there was no delay on DORA, but on CARA.
CARA is in the National Assembly, the Senate, I'm aware. Actually, I think they indicated yesterday, I listened to National Assembly, they said they will pass it today, I think. Now, DORA, again, was passed quickly, Chair, and you'll agree now I can disclose that we had an engagement, the Senate leadership, National Assembly, and the Treasury. And we agreed that there is no need to fight. I mean, we are serving the same people. And when a proposal was put to the National Treasury to increase by 10 billion, I accepted on behalf of the National Treasury in consultation with the government. And so we quickly agreed, and in a record, for so many years now, we haven't had division of revenue bill being assented to before 30th of June. Now, this year, so I was saying, even without CARA, I've already given instruction to my team. On Monday, latest Tuesday next week, we are going to transfer the July allocation to counties in full to all the 47 counties. And so then we will now remain with August, which we are still in August today. But I want to commit here before the people of Kenya.
Senator Sifuna, what are you whispering?
I'm saying now, that sounds like us.
Us who?
As ODM.
That's a very rare compliment. So that's why I wanted it to
I'm happy. We are gradually moving towards, with my SG, towards him understanding what the expert they sent to the Treasury has been able to achieve. I think he has taken a bit of time really to appreciate this, but he's appreciating it, and I thank him. Now, so I want to commit here to the people of Kenya that the July allocation to counties, all the 47, will go latest Tuesday next week. And Chair, by the way, last financial year, we even cleared transfers to CDF in full, including the arrears of 13 billion from the previous year. Finally, even the pensions, Even for women reps, or the GAF was transferred in full, including the pension claims that came to Treasury, we processed and cleared. Now, on the issue of list of shame, I take note. I think I'm going to, as I said, I'm going to engage our minds more as Treasury on application of 225 of the Constitution, Article 225 of the Constitution, on how to deal with some of these counties which have, I've tried to engage. We've sat with Mombasa County, and I wanted also to meet Nairobi County. Somehow it has been difficult. The governor sent his officers, but I thought if I have to engage, I need to engage with the governor because he is the buck stops with him. So once we get this engagement, we are going to agree. In fact, there are a lot of proposals. I don't know whether this report has come to the Senate, but it will come if it has not come. There are a lot of proposals how to deal with these amounts owing. The national government is owing the counties is owing the national government. We need to find a way of settling them in a way that both parties benefit.
Yes, just confirm, the report is already ready on those proposals of dealing with those pending bills. Is the report ready? Or I heard you...
The report is actually has been submitted to me.
Oh, okay.
Yes,
then,
the report of the committee, and which will find its way to the Senate if it has not.
Okay.
I'll just work with my team. It's a very comprehensive report. They did a good job. And so we need to tie it up. So first I'll meet with the Nairobi County because it's the biggest culprit here. We engage and see how the national government can make good what we owe the counties and